Using IPAs, EPAs is the way you always have the correct bias in the markets. So essentially, EPA means efficiency in price action, and IPA means inefficiency in price action. So what you can see is that we're always coming to test, if we're making higher highs, we're always coming to test the previous higher highs. Alright? And with efficiency, we always live in a gap. And this gap will most likely also have imbalance and liquidity, and you'll know that price eventually will come here. So we use this as a confluence, right? And even in this example, you know the price will come here and go like this. I mean, I've explained to you guys price doesn't move like this, but inside of this there's a whole lot of bullshit that's going on inside. But you only use these IPAs and EPAs on the higher time frame, right? That's where the most efficiency. And these can also be considered as order blocks, higher time frame order blocks, and that's why you also get the reaction out of it. The other logic explanation is if you use institutional blocks, you know that institutions are buying here, all right, putting a bunch of buying orders here, and putting a bunch of sell orders in this movement, okay? So the way they make profit is they'll keep their long orders, so they'll profit from the whole movement that the market is making, and in order to have those long orders they need the lots, so they'll counterpart the market, right? They'll short to get some buy liquidity, and as soon as we make this, these orders are largely in profit, but these ones are in loss. And the way they make money is they'll manipulate price back, putting short orders right here, to close these positions at break even, while these still run and continue to make profit. That's essentially it. That just to give out some logic. But yeah, you want to use this as confluence. As soon as we make efficiency with the price, you look for the next target. If we have inefficiency with price, you look to target that efficiency. Alright, move to the real markets. You can see that we're going down. Right, we're bearish. You have this efficiency right here, which prices comes down, tags it, you look for a short. No questions asked, you look for it. Alright? And we also come to test this, that broke liquidity, whatever. Then we come break lower. Come break lower, we're making efficiency with a daily low. Alright, with a daily order block, let's say. That's right here. With a 4-hour order block, sorry. That's right here. And we also have this one right here that wasn't fully tapped, that we're going to detail it later. So we just tapped an efficiency. So right now what you want to do is look for buys. Alright, we tapped it here. Alright, so we tapped it right here. So now we want to look for buys. And as we look for buys, we also have this efficiency that was left right here from this move, and this one as well that wasn't fully tapped. Alright, so we have made efficiency, and we look for inefficiency. So right here you can look for a long position. As soon as we get this, maybe you can look for short. Even here you'd see you'll have no position to place yourself here. One thing that you gotta be careful of, and I've fallen for this a lot of times, is that we come super close to make efficiency with the price, like we did here, All right, we come super close to basic efficiency with the price, but we don't fully touch it, and then price starts to move lower. Like in this case, that's most likely a trap. All right, be careful when it doesn't tap it fully and it starts breaking lower. Watch out for that. Maybe look for some sort of extra confirmation, because these ones sometimes I get wrecked, because you can see like for what, yeah, for half a pip, which is crazy. So yeah, we continue, we go higher to these highs, we continue to break structure. Now we're breaking structure and we have these right here. We come to make that efficiency with a 4-hour or daily movement up. All right, let me detail it. What's happened essentially on EU, a higher time frame, is that we made a move like this, something. Alright, I'm pretty shit, but yeah, let's say it's looking like something like this on the higher time frame. Alright, this point, it's what we got here. Right, and so as we tap this efficiency, even though we're bearish, we're looking for longs. We start to look for longs, we see price breaking higher, you got this inducement right here, and we take this order block and we take profit on, take advantage of news. I'm not checking bullshit. You can see my Discord, you can see the trades I take, and I actually took this one and it was on news and I make like $200 in 3 minutes. I think I've released a video by now, so you can go check it. Then we tap the efficiency of the whole institution block that's right here. Alright, so as soon as we tapped it, we gave out some reaction, but we also got to remember that this is too easy. It can look like a smart money trap. It probably is. This high didn't came to take nothing, didn't make efficiency with the price, didn't take out liquidity, so it's most likely dog shit, and the best thing you can do is just avoid it. But at least you traded with it until the efficiency has a confluence, and you also took out this smart money trap right here. As we come higher, you can see we're taking out traps. This trade doesn't really have nothing to do with the context, but still bearish, price testing it. Again, this you can also replace this with a larger order block, but essentially you took out the lows. If we're on a bearish structure, you take the lows out, you put a line just behind the point that's lower on the move on the structure, and if we're on a upside trend, you just take the higher points. All right, and we tested, and you can look for shorts. As you can see, price went down. Then, I mean, you can say we've made efficiency with smaller points like these or these, but it's most likely order block, just per se. So this can take to the ground, but like I said, we're on a bullish structure. Sorry, a bullish structure. We tapped it here. You look for longs as well. We just broke Asia lows as well, so that's a good confirmation. Even before that, we were tapping the two efficiencies that we haven't tapped before. We tapped it once, we gave out a reaction. We tapped the initial one, and we gave out a better reaction. Even though this is all a trap for later, as you can see, price will go to break it, because this didn't took out much. This is not significant at all, so we will be looking for it to get taken later. But you can still take advantage of these moves. This can still provide you with a 3R, 5R maybe. Then got this one that never got tested. Again, this don't count. Again, you look for strong breaks, and then from here you start to count it. you start to count as this as valid. But we didn't fully touch it, never came to touch it. And then as soon as we break liquidity, we give out a trap as soon as we touch it. Because then you gotta remember as well, because these are order blocks most of the times. So you also gotta wait for the trap. The trap will either come sooner, before the efficiency, or after the efficiency, like the order blocks. So here you can see we gave out a small initiation first, and then we came again. Also, because we broke the liquidity, there's also equal high. So smart money traders are looking at this. They see a break of liquidity. They'll place themselves on a order block, and they get tagged out. Then you can place yourself around here, and you can see these beautiful rejections from wicks, and you can take advantage of some move. Because then we have another efficiency with the price higher to come get. Come make efficiency with this one. And we also take out this liquidity, these sort of equal highs, and then we come back down to where? To either come to this efficiency right here, to this bullish efficiency, if you want to call it, or to this bearish efficiency. And price on his upcoming week will do one of these things. Will come down to then go up, or will come up to then go down. It can leave one of these behind, but sooner or later it will come back to it. And that's how you use efficiencies to your advantage. Because if in the upcoming week comes, and I see price coming right here, or right here, it can definitely come higher, or as well break the trap, but I mean not so soon. I think I'm gonna be looking for shorts here, right? Look for shorts. But even though we're bearish, as soon as price comes tagging in this efficiency, we can look for buys. Right? And because we tapped this, but we still haven't tapped this, if price decides it wants to go here first, we have the confluence of price needing to go fill this out. Right? You use them as target, as well as you use them as a positioning area. Alright? Stay safe, guys.